Hey traders, Jeff coming back to you again for Friday's play. I want to take a few minutes to kind of break down the PANW trade. Now, this was a bit more tricky, had to use a little bit more discretion, and this is where technical analysis will really push you forward because not everything is the same. You look for areas where it has distance and room. Not everything gives you 4R targets, which is where our hope is. So today was the day we had to kind of make that decision, 1R or 2R, take profits. It ultimately went 2R but without some issues. But we got a solid 1R play. So let's take a look at that, and I'll break down this trade as we went through it. Okay, so for the PANW trade that we took on Friday here, it was the only day trade that we did. We searched high and low. When you come into a room and actually watch this trade, you're going to see me scanning probably 400 to 600 different charts, all with about 15 to 30 minutes. And as I tell our members, we're looking for specifics in support, resistance, supply and demand, looking for something that's kind of ignoring the market, if you will. So again, I won't go through all that today, but this is the one I landed on. So let's take a look at PANW here. Now, we took a half lot on this, and so we took it very conservative in the fact that we were coming into that third week of options expiration. So we did a half lot, as I mentioned to the room, and we did basically just took a 1R piece. So should have been probably ended up being about a $1,200, $1,000 trade. We just took 225 and got out and went on and took some other diagonal spreads thereafter. So PANW here, 225 was the play. Let's take a look at this and break this down. So again, we took only a half lot. Again, few of the reasons were it was Friday. It was a little bit later. We took the trade. We were coming back down in this area here against a wide green bar. So I had caution in my mind. A lot of the sellers came out because of the leg, because of the top, as I mentioned to you the other day in one of those previous trades. We also were just now straddling the 8-period moving average. Now, this doesn't look like much, but when this thing came back off the bottom, it bounced at the end of the day back about probably $5, $6. So we did come out at the right spot. We also had to worry about the 21 EMA coming from the bottom. So those are some of the quick split second decisions that you make when you're determining whether I want to take this all the way or do I want to go ahead and kind of just take some parts of this along the way so we don't have to give any money back. We would be profitable, but we want to keep as much of that as possible, obviously. So the other thing was that we were not doing an ad. So we did not normally, as you see how I trade, I add to the winners and then I reposition my stop to keep everything the same. Then I look to take pieces as it heads towards my 4R target. This one here, I said half lot, no ad for all the things I just mentioned to you. Again, when you see a big, huge bar coming against 8 and then coming back against that, it's very misdirectional here. And we'll take a look at the market too, what the market was doing when this was going on. So we scalped out exactly at 1R. So PANW had relative weakness. Again, as I mentioned the other day, relative weakness just means that the stock is weak as opposed to what the market's doing. Now, as I mentioned also, relative weakness becomes, if you add one more word to that, poor relative weakness. So at some point, if the market continues to increase, like it did, I'll show you here on the SPY, at some point, the sellers just get dried up. The bids are just going to get hammered in the market because everything's a part of the market and it's going to push it back up. And that's what we don't want to get caught up in. Well, if you notice here, the market opened flat. This dotted line down here is where it closed the previous day on the 23rd, right, 22nd. And then we got in here, and this was a strong $4 run right up to standard deviation line. Now, we drew this line prior to the market opening. Matter of fact, we had standard deviation 1, 2, which you can't see, it's up further, and also negative standard deviation 1 and 2. Why is it important to put those on your charts? Because standard deviations is how they determine option prices. They move in order of 16 deltas. 16 deltas, one standard deviation. So this went right there again, right there, and double topped at that point before it moved back down. If you look at the formation of this, it actually had what we call an M top. Sometimes double tops get taken out. Very often, the second resistance area is basically banging off of minor price resistance. In this case, it's the third pop and often the fourth pop that gets through. But take a look at the second one, had a perfect M-top formation. But more importantly, when we got into the trade, this is what was going on in the SPY. This is actually what was going on in the Qs. The PANW is going to be more NASDAQ related. tech related, not so much the broader market. So if you look at the Qs, they weren't quite as dominant as the S&P 500, but they were up about 75%. They were out right in here. Still a very strong move up here. So we identified a stock that was weak to the overall market trend, both the S&P and the NASDAQ. So we've got something there, because for sellers to hold that down, that's big money. You don't come in with, somebody with a few hundred shares to hold that. It takes tens of thousands and hundreds of thousands and millions and even tens of millions of dollars to hold that stock down when the market's going up. So that's the first identified. Now, it's not as easy as that, because if that were just that easy, we just find it, we take it and go, right? That could just be a number of orders, and they get that, 100,000, 200,000, 10 million mark, whatever it is, out, and then the stock pops because they don't have the character of all those continuing sellers going on for any length of time. Just a matter of to get those orders out. Typically, those are contracted, where they have to get those orders out in a period of time. Let's say Friday is a good day, by 11 o'clock, good time, and that's why you'll see them pressing on it until they fulfill the order. We don't know when those orders are going to be fulfilled. We have to assume that they're not, and it's going to continue on. And sometimes that is the case. They're just starting an order that'll last a week. But today was actually the one where it actually did bounce back up, but we got out here. So market going strong. PANW definitely had weakness. We'll take a look at the trade. This is the trade. This is actually the stock, PANW, very tech heavy. It was on its own page, as you probably have heard. Once again, pay attention to this lavender or this pink line in here. This is VWAP, okay? Now, as I mentioned on Thursday in the Apple trade, I said when they touch this, either the EMA on the 9, in this case this is a 2, the EMA on the 9 or the 5, on the 2 or the 5, and they start touching VWAP, third time's the charm. Because at 3 times, if they still can't get through it, the buyers end up leaving, or at least the bulk of the buyers that really were influencing direction leave. So I put over here, buyers left 1, 2, 3 touches. I become more interested if it can't break through after 3 solid moves down and back up. And in some cases, when you see that, you can just get in the stock right here. And by the time you break out down here, you're already at 1R. So we'll do more of that. Today we waited for, because it was definitely a jumpy stock, we waited for it, and I only gave it a $3 stop. This stop runs $7 to $10 a day. So when you're giving them $3, I'm looking for 4-hour moves or very quick 1 to 2-hour moves. So sometimes I'll wait to see if we get in. We got in right back in here, and it pitched on down here. As you can see down here, we only had 83 shares, right? And right back, we got right back into here, and then it went up slightly. Our stop was just over this area, giving a little bit of room above VWAP, and then we actually came down, broke down. Look what happened. It continues south. Take a look as it continued down. Now, our target was this, right? Our target was right around somewhere around the bottom of this bar. And we actually did hit that. But see, this tail was jumpy because the larger time frames didn't show clear, solid moves. There wasn't like total void to the left. There were some things in the way. There was some previous price in the way that was creating this conflict, so it wouldn't easily move down. And that's normal with all stocks. So the target was 1R or 379.02. Technically 379. We slipped getting in the trade. So 379.02 ended up being probably about 9/10 of an R. Our numbers would have been a little more exact had it been exactly. But we slipped getting in. We wanted to take it out at that whole number. Went down to 379 and bounced about 80 cents. Ironically, that we do want to come in above those bottom numbers. When you're looking for a whole number exit, typically come out a nickel or a dime before. The higher the price, the more you need to come out sooner. Here, I decided to get out at 379.02, and we did. Also told the members that it could go to the 65-minute 200 MA. Now, let's take a look at this. This red line down here is a 65-minute chart. This is a 200 MA. So when the market starts going, in this case, relatively weak against the market has eyes where it wants to land, typically. And traders will trade this down to these marks. No, not exactly. They did push through that. We got out just above. We could have made 2R on this trade, right? But as I mentioned on Friday, with things jump around, 3rd month options expiration, I wanted to kind of play it clean. It wasn't a clear void to the left. And the market was zooming higher. So I didn't want to chance that going into a poor relative strength mode. So we were playing it safe because of the market. Didn't want to chance that poor relative weakness as I marked up over here. But yeah, we could have got another R out of this trade in here. So we played it safe, pulled up 225 bucks. It should have been an easy $500 or $1,000 trade. But again, we just kind of laid back. And those are some of the more just off the cuff type adjustments that you want to make when you're doing this. So you don't want to necessarily just do the same thing every time. The goal is that 4-hour trade, and then take pieces along the way based on my my management tracking that I showed you last week. But many times we don't want to just get so bogged down in looking for mechanical management that we miss what the chart's telling us, right? So you always want to let chart is king, secondary is mechanical, right? And so we do have our mechanicals there for the right situation, but we wanted to use the chart. And a good thing, we would not have hit 4R. It bounced way back up here by the end of the day. And so it went about halfway from what the mechanical was. So we got a little bit of risk. Better be safe than sorry. So again, take a look as I go through. You kind of see what we're doing and kind of what our statistics are in our trades. This is just a snapshot just of the last few days, last actually 2 weeks exactly, starting from AVGO here. And I'm not going to go through what the win loss is, but look, there's 2 losses. We've had this many wins, okay? This is because we are advanced technical traders. We have a lot of experience doing this. Most of the traders who's got right now are trading data. Not that that's a bad thing. We use that in certain parts of our trading. When you're trading these short duration trades, you better be technically savvy. And if not, you're going to get whipped around in here. This is why we have a very high win ratio in our day trades. Now, the trades that I'm showing you here are not even what we track. I'm not showing you any day trades in here. We do quite well at that. We had about 6.7 R win. If you're doing just a $1,000 trade, that's tracking a $25,000 a month just in our day trades, not counting. And that's only 20% of what we do. The rest of it is going to be in iron flies and butterflies and swings and stock swings and equity swings, diagonal and calendar spreads. All of those things are mixed in to our normal trading. So day trading only represents about 20% of our business. But outside of that, this is the other 80% on top of that. So you kind of get an idea. Again, I'm tracking this only about 250 risks just for the room. I'll show you next time I'll do this. I'll actually show the dashboard and show that we're about 150, 60% up since April 15th of this year on annualized returns. You can see some of the different ones that we do here, from the 18th candle to the verticals, to the calls, puts, sell, weeklies, and now diagonals. I don't have that listed in here, but I do have in the notes. So you can kind of get an idea. Myself and Mike are calling those particular plays for the last 2 weeks. So it gives you an idea that we do have a lot of success at Full Throttle Traders. One last thing here. We certainly appreciate you guys taking the time to tune into some of our plays. I'll keep putting these lessons out there because I think if you continue to see these time and time again, it'll begin to resonate, begin to kind of see the flow. It's always good to have trade with the room, trade with us in the room. But if you're just on your own, you want to learn, hopefully these lessons will prove out to you what's actually working and how we're trading, what's some of the ebb and flow going on in our thoughts, in our verbiage to the room when we're in the middle of that emotion, that 940, 950 time frame. When is that a good play or is that isn't a good play? Is that too much wiggle? Is that enough relative strength? Is there targets? Whatever. Those things you get from just benefiting from being in the room, those lessons are extended real time. But if you just want to trade on your own and just kind of use some of this free content as a relation to understand, you're more than welcome to do that. If you have struggle, come in the room, check us out. If not, if you do well, just keep doing what you're doing here. And again, we thank you for tuning in today's play of the day. Your support keeps us going here. Many more exciting trades and strategies coming your way, so stay tuned. Again, eventually I'll get into the other 80%. Right now, I just want to hunker down on day trading and show you what it's about, how we do this using technicals here. Nobody that I know of, the entire trading world that I know, trades the way that we do, specifically off those technicals with the type of real results that we do. They're all mechanically based or data based, I should say, and they're typically doing way out of the money or way in the money type plays where there's just letting time kind of variate the trade for us. We're really in. We're in. We see that supply. It's almost like we see people in those stocks, not candles specifically. If you have any questions, you can always email me at jeff@fullthrottletraders.com. That's Jeff on the sheet here on the presentation. Jeff@fullthrottletraders.com. If you just need a one-on-one, no obligation to join our team at all. But if you just want a one-on-one, if I can help you out in your trading, I'll certainly give you that time. We are a smaller company. We just started here April 15th. But I've been trading 25 years full time. But now April 15th, we launch our own site. So we've got quite a few members already, and we're looking to expand that. But if I can help you out, even with not doing that, I'll be more than happy to kind of extend that. To me, show me what you're doing, what we're doing, and maybe kind of where I see there might be a fix, and to maybe help, kind of customize your approach a little bit more to what our approach is, which is very successful, and help you out along the way. Check it out. We love doing these presentations. We'll do a few more this week here as the weeks present. I hope this was valuable, understanding poor relative weakness, strength against the market, and taking early exits, not mechanical. Thanks for your time. We'll see you on the next one. Take care, everyone.